Hiring your spouse and kids. You know you always end up giving your spouse and kids money for something or another, right? This way, you lower your taxes by getting a write off for the money you're already giving them. Stop giving your children allowance, pay them salary. This worked out great for Mr. Davis. He wanted to send his son Darren to a private school where he would concentrate on software design, specifically video game programming. The tuition was $9,800 a year and he just couldn't swing it. The answer was to hire Darren to work in his business. This way, Darren could pay his own tuition with his paycheck, the business gets a tax deduction, and Mr. Davis paid less in taxes because of the extra deduction. Mr. Davis was apprehensive at first. He couldn't think of what Darren could do in the business that he could be paid for. But Darren had the answer. He developed an internet-based marketing program for Mr. Davis's business. He builds the client list, develops leads, manages an email sales campaign, and even sends out birthday cards to all the clients. Mr. Davis says this program has resulted in new clients for the business. So in addition to getting a deduction for hiring his son and paying less taxes, he is also making more money due to his son's efforts. And his son is getting the training he needs to develop his own video gaming system. Your spouse and kids do have to actually work in the business in order for this strategy to work. But work can be many different things. A case for a kid as young as 7 years old was upheld by the IRS. Kids can hold a variety of jobs, such as models, paper shredders, office cleaners. They can pass out brochures or do internet marketing. You just have to be creative. What does your business need that your child can do? You will need to keep track of their hours and duties, just like any other employee. But the beauty of it is, you can channel those funds into retirement plans, private school, save for college, allowance, and any other extracurricular activities. And you get a business tax deduction for it. One client has his son's weekly pay going into a life insurance plan that will give the child $6 million by the time he's 60 years old. In the meantime, he's able to borrow from the fund for major life events like college or wedding or purchasing a home. The next strategy I want to tell you about is setting up an accountable plan for your automobile. Most business owners put a lot of miles on their cars. They want to put the car in the business's name, but I say no. Let that car pay you tax-free money instead. You can set up a plan where the business reimburses you for all of the business mileage you rack up at the current mileage rate. That means each month you submit a mileage report to the company and it writes you a check. I have one client who works from home but travels over 850 miles a week visiting patients. Last year he drove 40,000 miles. Since we set up the accountable plan, he received mileage reimbursement checks in the amount of $20,400 last year. That means the company received a deduction of $20,400 and he received $20,400 in tax-free money. This is money he does not have to pay taxes on. This is extra money in his pocket. He sent me an email after we filed his taxes this year. It said, "We are very happy." You'd be happy too with an extra $20,000 you don't pay taxes on in your pocket. And this is tax-free money. He doesn't have to claim it on his taxes. He doesn't pay taxes on it, and the business gets a write-off for it. The last strategy I want to tell you about is forming an S corporation to house your business. There are many advantages to the S corporation, but the biggest money saver is the fact that S corporation owners do not pay self-employment tax. Self-employment tax is an additional 15.3% tax based on the profit from your business. Let me tell you about one of my clients that saved $35,000 just by doing this one simple thing. Sheila is a real estate agent and her business netted around $200,000 profit, so she felt like she was successful. The problem was she was paying over $100,000 in taxes because her business was organized as an LLC. But how successful are you really if you are giving Uncle Sam half of what you make? You know, back then, having an LLC was the hip, cool thing to do among business owners, but it just doesn't work for everybody. Just because of the way she was organized, she was paying Uncle Sam an extra $35,000 that she didn't have to pay. She was so mad at her old accountant for not telling her that she was wasting $35,000 a year. The S Corporation took care of that problem. So, do you see how important it is to have a savvy tax professional overseeing your affairs? Just that one little change saved her $35,000. These are just four of the hundreds of legal, proven, bulletproof strategies available to you, but you must take action. See part 4 of 4 totally legal ways to save $30,000 to $50,000 on your next tax return.